Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping on the call. Pretty good amount of volatility, concern. We saw concern over some AI spending, some tariff talks, Federal Reserve policy, inflation, a little bit of everything. So we saw the S&P 500 and the Russell 2000, that small cap index, fall about 1%. We saw the Nasdaq Composite, remember that's pretty tech focused, that was down the most, off about 1.6%. Value stocks did outperform growth stocks. Technology sector, that's the one that pulled back the most. That was off about 5% on Monday. So we saw some mixed earnings results from some mega cap tech, and I think that also led to that volatility. Keep in mind that a lot of these ultra large cap stocks that make up that S&P 500, that Mag 7, the like, they're priced to a little bit of perfection. So any crack, any concern, any not exceeding those big earning expectations, I think it's understandable why you might see them trade down after they report. So we saw gold futures rise about 2%. Crude oil fell about 1.5% due to some tariff news. U.S. Treasury yields, they fell slightly due to a more hawkish Federal Reserve statement. The Fed did keep interest rates unchanged. Now, they noted some solid labor market and somewhat elevated inflation. U.S. GDP growth slowed to about 2.3% in the fourth quarter, while we still saw a pretty robust consumer still spending. If we look at consumer confidence, and that hit a 4-month low, pending home sales were affected by some of those rising rates, some rising mortgage rates. Now, going overseas, we saw the European Central Bank and the Bank of Canada both lower interest rates. From an inflationary trend standpoint, we saw China factory activities contract, and that highlighted some deflationary pressures over in China. Now, looking ahead, outside of being earnings, and that's what we're looking at. We're looking at major earnings coming out from AMD, Amazon, Palantir, Qualcomm, MicroStrategy, Pfizer, Google, so on and so forth. So again, we're in the heart of it. And the earnings, I think, are coming out at about 11%. So that's reasonably strong growth. We want to continue to hopefully see that to justify some multiples here that we're seeing in the market. But week ahead, we're looking at some U.S. job data, some non-farm payroll growth expected to be about 150,000. Some average hourly earnings forecasted to ease maybe slightly. Some ISM manufacturing and service PMI, that'll be released on Wednesday, I think a little bit earlier in the week. Factory orders, we'll be looking at the Q4 productivity and consumer sentiment numbers. Now, internationally, we'll be looking at the Bank of England likely cutting some interest rates. The BOE will be signaling maybe some more future rate cuts, as well as the BOE launched a new financial stability tool looking to ease some bond market volatility. European flash CPI number reading will be released, and we'll be looking at some Germany factory orders, industrial production. The OPEC will be meeting, as well as China. They'll be releasing their PMI data and expected to confirm some weakness inflation data over the next weekend. Jeremy?
Gotcha. Well, Graham, I had a question. You mentioned it a couple times there at the beginning of the call about, the administration has come out with the tariffs this week. What do you see how that's going to affect the markets going forward?
Well, I think it's headline volatility, right? I don't think there's any mystery. I mean, he said that he was first on his agenda. He wanted to increase tariffs. He said he wanted to increase tariffs 60%, but I think the tariffs are coming out more like around 25%, 10%, some of these ranges. And, the thing is, are they not going to negotiate? How long will they be on? Is it going to be a tariff war? What is going to be the retaliation? And if it's protracted, a tariff war, that's going to affect earnings, consumer spending, so on and so forth. Then I think the market's got some real volatility. Outside of that, outside of just you got to expect volatility, 5-10% adjustments in the market on the downside would not be a big surprise where we're priced right now, even though earnings are holding up, and that's really key. So this is headline risk, not to be completely unexpected, but I wouldn't trade around it necessarily. Just be mindful of whatever they're talking about might not be long-term. It's probably going to be negotiated down. At least that would be something that we'd like for stability in the market.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thank you to our listeners for checking in with us every single week. Go check out our website and our YouTube and our social media pages for more information. We'll talk to you next week.
Take care.